And the last thing that reduces the forgiveness is the EIDL grant. Anything you received from the EIDL up to $10,000 is going to reduce your forgiveness amount.
All right, now to the really fun part is the forgiveness application and the calculation tools. I'm going to, so we've been talking with several banks, and they're suggesting or even requiring that you set up a separate bank account to track the funds. We just want you to know this is not a requirement by the SBA, and we are not recommending this. Our recommendation is that you deposit the funds into your operating account and you set up a long-term liability on your financials. If the bank is requiring that you set up a new bank account, then of course you do it because you would need those funds. And then the SBA released their application late last week, and the AICPA has created a calculator. This is, I think we're on version 3 of their calculator so far. But we are going to look at those today in an overview, and then we will go in more in depth later on. So the SBA application, a few things to keep in mind. Yes, the forgiveness of the loan is not taxable income. However, we always say watch your back. The Treasury has published that all expenses used in the forgiveness calculation are not deductible for tax purposes. So while you're not putting it on your sales line, you cannot take it on the expense. So it has the same effect as taxable income. The SBA application is, right now, version 1 is 11 pages long. It is a PDF. 5 of the pages are instructions, so lots of words, and 1 page is optional. There is not a lot of clarification on some stuff, still some black holes, and we have a feeling that along with how we had different versions of the PPP application, there could be additional versions of this forgiveness application as well. Let me grab, here is, so you guys can look, the application. Page 1, like I said, it just tells you what they're asking for, very detailed-ish. And page 2 is the same thing, so here's, yeah.
We cannot see the application. Thank you.
Thank you. Nope, thank you for stopping me. So page 1, it just goes through what they mean, what they're asking for on the first page of the application. Same thing for page 2. So here's page 1. Here's all the information they're going to want just on basic information. There are several.
Jennifer, I want to point something out. If you can go back up to the application, the page there. So the yeah, the box. So don't check the box unless you got $2 million in loans, which I'm assuming that's nobody on this call. But this is the essentially audit me checkbox. The application that you completed when you requested the PPP loan made you certify that you needed the money. You all remember the story about the LA Lakers getting their PPP funds, and everybody was up in arms, and rightly so. I'm still trying to figure out who at that organization was the one that thought that was a good idea. But in any case, Treasury came out and said, if your loan amount was less than $2 million, you're going to be assumed that you needed the money. So there were questions. We've seen a lot of clients that are like, well, do I really need it? Do I not need it? You don't have to worry about it anymore, but don't check the box.
Thank you. Yes. So you can kind of go through all of this. This is the forgiveness amount calculation. A lot of the numbers on here come from the next schedules. So there is this application, then there is the Schedule A, and then there's a worksheet for Schedule A. We'll look more at that on the calculator from the AICPA. It's just that here it's a lot of words and flipping back and forth between instructions and the application. Like I said, this is directly from them, and it goes back and forth on a lot of stuff. So that is the application. On the forgiveness template, it goes through the same thing. It has the forgiveness calculator. It has a Schedule A. It has the Schedule A worksheet. It also has the non-payroll costs and the payroll accumulator. It has instructions here on everything that's blue you need to fill out as a business owner. I put an example in here so we can kind of look through it real quick. It will go more in depth on examples and everything next week on our webinar series next week. But just so you could kind of have an idea, you'll need to know when your loan was dispersed. There is an alternative payroll covered area that is just for payroll. If this example, their payroll starts on 4/16, so they wanted to stay from 4/16 rather than 4/15 so that it matched their payroll. And then it goes through all of the green stuff comes from the other schedules. Here, this is very important. Like she said, the EIDL emergency grant reduces your forgiveness. So even if your eligible costs are more than your loan amount, any EIDL emergency grant that you got reduces it. So at the end of it, you will have $10,000 that's not forgivable. Just keep that in mind. That is as of right now. Keep in mind this is all flow. We're just doing what we know now, and that's what they're showing is that it will not be forgivable. Here's a Schedule A. There's just a few things. Employee health insurance is one of the things that's covered under payroll, retirement plans, and then keep in mind it's only employer, state, and local taxes. This is why setting up another bank account scares me, because clients are going to get comfortable and think if they're using all that money, it's all going to be forgivable. It's not. The FICA portion of it, and then also on the non-payable options, keep in mind it's interest only on the mortgage. So if you're paying your mortgage payments out of there, it's not the whole thing. It's interest only, and they specifically say business mortgage interest. So here is the other items that are non-payroll. They break it down by week based on when you got your money. I put in here rent. This transportation thing, I've looked everywhere. If anybody has any information on what that means, please let me know. Electricity, that makes sense, gas, water, anything. These all have to be in service before February 15th. You can go get a new phone line and want to pay for it. This other, not sure why. I guess maybe they just put one in there to a catch-all for something. I don't know. Haven't been able to find anything on other either. The interesting thing I found on the payroll is they want employee name. They're going to go by employee. You have to put each employee name in there. We were prepared to give you a summary. So we are switching, and this is what you'll need. You'll need the employee name and an identifier, and everything has to be filled out in the blue. I just did kind of a lump sum so we could see how it worked out. Keep in mind, this is where it's going to catch you, is gross wages. You can't pay anyone over $100,000 annualized. That doesn't mean you can't, it's just you can't claim it as your forgiveness. So the issue is commissions. If they have a big commission, during this 8-week period. You can pay it to them. You're not going to be able to claim it on your forgiveness part. But it's annualized. They have locked it down. They have figured out in an 8-week period, you can pay somebody $384. Oh, the fun FTE. And we'll go more in depth on how to calculate that later, but here is where you put that. Another thing to keep in mind, they do...
Jennifer, can I interrupt you real quick?
Yep.
We're getting a lot of questions about the spreadsheet. We will post a link to the spreadsheet so that everybody will have it.
Yep. And I think Chelsea's going to touch on this as the exemptions portion in here. So they have, they realize that you might not be able to get back up to your FTE. So for Schedule C forgiveness calculation, they've come out and said it's going to be your 8 weeks worth of your 2019 net profits from your Schedule C. So the same number they use to calculate the loan amount, they're going to divide it by 8 instead of 8.5, or times it by 8. And then you get your utilities as well, your interest on mortgage, business. Keep in mind these are business expenses. So everyone else, it's payroll, excluding employer FICA. Remember, reimbursements are not a part of payroll. And any SBA will reduce the loan forgiveness for any COVID-qualified sick and family leave. So keep that in mind if you're paying somebody through that act. That will reduce your payroll accumulator. And you can do the health care premiums, retirement fund matching, and it's all subject to the FTE and compensation. All right.
Okay.
So that is the calculator. Okay.
There you go. Okay, so before we move on to the full-time equivalent employee calculation, I do want to address a question that a lot of our clients had been asking over the last couple of weeks, and that was, if you accept a PPP loan, can you still defer your payroll taxes? And the answer is yes. The IRS did clarify that if you accept the loan, you are still eligible to defer the payments for the employer portion of Social Security tax up through the date that the lender issues a decision to forgive the loan. So yes, you can defer those tax payments still, but it is only employer, not employee. It's the employer portion of Social Security tax. So moving on to the full-time equivalent employee calculation, we have 2 options. You can use the 40-hour option or the simplified option. This is an example of the 40-hour option. So if you look, if you have your 8-week forgiveness period, in this example it begins April 20th, and what you really need to be looking at is the average hours per week per employee. So for example, in A, that employee averaged 45 hours a week. What you need to do is take their average hours and divide that by 40 to find their full-time equivalent employee figure. So if you look below at number A, 45 divided by 40, it's going to be capped at 1 per person. So that's what you need to do. Again, it's average hours per employee per week in order to find this calculation. So the important thing to remember was that the purpose of the PPP loan was to encourage employers to keep their employees staffed. So, you know, we've had some people ask, do I have to keep the same number of employees or the same exact employees on payroll? Yes, you do need to keep the same number of employees, but that does not mean that you have to keep the same exact employees. If you have someone that quits or you have someone that you need to fire, that's absolutely okay. You just need to make sure that you hire a replacement quickly by June 30th, 2020. Next, thank you. So this is the simplified method, and really all you need to know is that for the purposes of this calculation, any employee that works 40 hours or more per week is going to equal 1 full-time employee. And any employee that works less than 40 hours a week is going to equal 0.5 or half of a full-time equivalent employee. So as you see in A and B, they both work 40 or more hours a week. They're equal to 1. And then in employees C, D, and E, they're all less than 40 hours a week. They're equal to 0.5 each for a total of 3.5 full-time equivalent employees.
And if you compare that to the first one, it was 3.7.
Yes.
There's your difference.
Yeah.
And it's your choice. So
Yes.
I would recommend definitely doing it both ways to see which benefits you.
Yes. It's just important to remember whichever method you choose, you have to stick with it. So this is an example of how, based on what method you choose, it could affect the potential reduction in your forgiveness amount. So if you pick a reference period or a look back period where your full-time equivalent employee calculation is equal to 4.5 using the simplified method. But when you calculate your 8-week forgiveness period, your full-time equivalent employee is equal to 3.5. You're subject to a potential 22% reduction in the forgiveness amount because you did not meet or exceed the full-time equivalent employee number, 4.5, that you picked for your reference period. So if that happens to you, the safe harbor is that you have until June 30th of 2020 to increase your full-time equivalent employees back to 4.5 or more to avoid that reduction. And then they did concede that changes in staffing from year to year can change organically. So they're going to allow you to select your own look back period. You can either choose from February 25th of 2019 to June 30th, 2019, or you can choose January 1st, 2020 to February 29th, 2020. And then if you're a seasonal, you can also choose any 12-week period between May 1st, 2019 and September 15th, 2019. So a really good example of that would be a company that may have restructured in 2019 and eliminated 2 positions by the end of 2019. It had nothing to do with COVID. So instead of being penalized because you automatically have 2 less employees this year than you do for that look back period, you're given that option to select a different look back period or reference period so you can avoid that penalty.
So average wage and this reduction in forgiveness, if either you reduced a total annual salary more than 25% for anyone that wasn't making over 100,000. So we have an example here. So it's always good to remember you always need to look and see, were they paid less than 100,000 in 2019? Yes. Okay. So now we need to look at them and see if they were still paid within 75% of their pay prior to COVID. So we have an example. She was paid, I'm just saying she, because it's a lot better than A, paid $8,000 during the 8-week covered period, and she was paid $20,000 for the period of the first quarter. So her annual wage, you take the $52,000, which is $8,000, so she's paid that for 8 times 52. That's what they came up. They annualized it to $52,000. Her average annual salary through for the first quarter was $80,000. 52 divided by 80 is 65%. They reduced her more than 25%. So there is an elimination or a reduction in forgiveness. So they'd have to reduce her wages, and $1,230 would be the reduction. So you see the math there. You take the 80,000 times 75. So to be okay, they needed to up her salary to 60,000 for this time period.
Yeah, right. So another way of saying that is the amount of the reduction in forgiveness is the amount you reduced in excess of 25%.
Right. Yep. But there is a safe harbor.
Mm-hmm.
course there is.
Take it away. Let's take it away and give it back. If you increase their pay within the 75% by June 30th.
So, Jennifer, let me go back to that last point because it was kind of confusing to me. But the way I thought about it was, okay, you did your PPP on salary amounts for last year, and this year, before COVID happened, you have this reference period that they're looking at. Well, the safe harbor brings in the time that COVID happened, but before you got your money. So if you get back to where you if you get back to where you were pre-COVID by employee, that's the safe harbor. So it brings in that third period of what happened once the pandemic started.
Okay. Now we get to my favorite part. Documentation. This is what the SBA has said is required. Now, we know lenders are going to be different. They might require more, but payroll, the bank statements or third-party payroll reports, your tax forms for 941 in state unemployment, your payment or statements for health insurance and retirement matching, and your FTE calculations. For non-payroll, your mortgage interest statements or your payment. You're going to have to get your interest statements to prove because, and then lease agreement and or payment or statement. And the lease agreement has to be in place before 2/15/20. So for our business owners that own their building in a different company and rent it to yourself and you never did a lease agreement, you probably need to contact an attorney and get one in place. And then utility invoices or payment. I've been telling everyone, if you have the invoice, save the invoice. That's the deepest they could go. Not required, but you must retain your salary wage reduction calculation, your 2019 records by employee to support your calculation. This is the one where if you don't meet your FTE requirements, you have job offers where you offered somebody the job. You have firing for cause, voluntary resignation. Someone says, I just don't want to do this. Or written requests for reduced hours, reduction in hours. So this is very important if you're not meeting the FTE and you're saying, hey, no, we tried. And then your FTE safe harbor computation. These all need to be retained for 6 years from forgiveness or final repayment. Keep that in mind. If you pay it out, it is from the date of your last payment, not from when it was forgiven. That could be a 2-year difference, or 18 months to 2 years. So the calculator, the Excel spreadsheet will take care of all these calculations. So you might think about getting that and keeping that. What if I don't spend all the money? You need to spend at least 75% for the forgiveness on payroll. The other 25 can be spent on utilities. If you don't spend all the money as described, it's going to turn into a loan. It's payable within 2 years at a 1% interest rate. Keep in mind 6 months is deferred on payments, but it is a 2-year note. So your payments are split over 18 months.
All right, so I've got some questions here that we have to answer. I've also put a link to the Excel file in the chat. So the first question for Chelsea and Jennifer is, if I'm a sole proprietor and work from home, is the mortgage interest forgivable? You have you may not know the answer. That's fine. We'll find an answer, but
I think one of the things is up to the amount that can be claimed on your Schedule C.
Yes,
1040.
that's correct.
So what would be deductible for your home office deduction?
Correct.
Okay. All right. Payroll incurred prior to receiving the loan, can it be included? Didn't get the money until late April. Is it okay to include this in the 8-week window? So, and this goes for all of your expenses. So one of the first questions we asked before we got the loan application was, oh, well, great, I can pay myself back rent for 6 months, right? No, all of the expenses, payroll and non-payroll, have to be incurred and paid. So I had a business owner say, well, I made my simple contribution from last year during this 8-week period. Does that count? No. So most of the time, like retirement, so if you do a match on a simple or a 401k, that is technically not due until the filing of your return the following year. We here at CORE make that match with each payroll, so we don't have to do anything different. But if you don't normally make that contribution until the following year, you need to pay it during that 8 weeks to be able to use it for forgiveness. And the same thing would be with payroll. Now, how are they going to know what you're paying them for? You tell me. I don't think there's any way practically they're going to be able to answer that question. So I think you may have answered this, but I'm going to ask it anyway. Do you know if there will be a penalty if you have an employee who quit because her school ended and she had to move home?
So there's not a penalty specifically for that reason, but that goes back to the full-time equivalent employee calculation. So you need to just make sure whichever method, whether it's simplified or the 40-hour method that you picked for your reference period, your full-time equivalent employees, it needs to be the same or more in order to avoid that reduction in the loan forgiveness.
Or you can
so
prove that you tried.
Yes.
Right. Or that you prove that you tried.
Yes, that you offered a written, I think a written in good faith statement saying she could come back and she denied.
Okay. If I have an S-Corp and the owners are getting a salary, do they qualify for PPP loan forgiveness?
Yes.
Yes, on the calculator, which you'll see, I didn't, maybe. There is a spot for compensation paid to owners.
Yes.
They are limited to the $100,000 annualized.
I think it would be important to make the distinction because I know a lot of S-Corp owners take a salary and then they also take dividend distributions or draws. They may call them different things, but it's only what you're taking out that's showing up on the W-2. So dividends, distributions don't count for forgiveness. Our corporate officers own the building. Can we pay the rent out of our PPP loan?
Yes, but that kind of brings us back to if you own the building in a separate entity and you've never had a lease agreement. That's what Jennifer was referencing earlier. If you've never had a lease agreement in the past, you're going to need to get on that in order for it to be forgivable. But yes, you can pay the rent.
and what was incurred and paid.
Yes, thank you.
All right, no paying last year's rent that you didn't pay.
Yes.
Okay. Let's see. What is the effect of an employee? I think again that we answered this, but this is a different one. What is the effect of an employee separating for performance or leaving for another job during the 8-week period as far as the count calculation?
So
they have that that spot there that you can, as long as you have everything documented.
Yes.
Okay. Can I give bonuses to staff if I'm running short on the 75% payroll threshold?
As long as it is not over 100,000 annualized for the total period.
Right. So you know, it kind of goes back to that first question we had of what are you paying them for? It needs to be incurred and paid. You know, can you, so the alternate pay period gives you the option of choosing a different start and end date of that 8 weeks to coincide with your regular payroll periods. So, you know, you don't have to like pay early to get in the 8 weeks. You can just continue to do it in your normal pay period. But what goes into the calculation of what you're paying them for during that 8 weeks, that's nowhere in the documentation. Just tell you what's on the application, incurred and paid.
Right. And cannot be over 15,000 total for the 8 weeks.
That is correct. All right.
To be part of the forgiveness.
Being self-employed, does it matter how I'm making payments to myself?
I don't know if we have a clear answer.
I thought you said that the amount for self-employed is automatically calculated, so it's not based upon what you actually...
Right, but my question is we do have some that have a Schedule C that also pay themselves W-2.
Ah, I see.
That's
okay.
where Chelsea and I are kind of, oh, well,
yeah.
a little more information on that would be helpful on that. But if you are not paying W-2, then yes, it is based on your net profits from 2019 divided by 52 times 8.
Yes.
Okay. I'm going to read this one. Let's see here.
Sounds ominous.
Okay. How are most nonprofit organizations that have grants that are still paying employees salaries making this PPP work? For instance, we have a Head Start grant and they are still paying for Head Start employees, but then we had other programs that were funded separately that we needed for PPP. Are the questions on forgiveness only asking as an organization as a whole?
It's a really good question.
My answer to that would be yes, I'd say it is the organization as a whole. Whoever made the loan application, right? That is what you're going to submit back as your application for forgiveness. I would tell you that you need to really double check on the grant requirements, though, to make sure that there's not any crossover or double dipping. Now, CORE does not do a lot of nonprofit work, so we're not the experts on that. But that'd be my best answer that I've got. Chelsea and Jennifer, do you have anything else?
I'd also question what was used for the loan amount. Did they lump it all in there, or did they extract out that grant, that Head Start employee? Would be my question.
Okay. All right, here's a great question. My business is still closed. Don't think it'll be open until the end of June. I've got my money May 5th, but our business is still closed. Can I wait until we open for business to pay the staff the PPP?
We have not seen anywhere that, I know in the HEROES Act that they're working on,
Right.
they want to extend the 8-week period to possibly 12. That might be the only saving grace there is that. So
Just
otherwise,
industries.
it's a loan, yeah, for specific industries. So other than that, you'd have to look at that and see if you have if you're in that industry.
Yeah.
Right, and
it turns into a loan.
Yeah.
Yeah, so if you really think about it and go back to the very first slide, which is why did they do the PPP program in the first place, and that's what drives all of these requirements, is they want you to keep paying people. They want you to keep people employed. So that's why they set the period to begin with. Maybe they will extend it, but I would think that in that situation, no. If you didn't pay it 8 weeks from disbursement, you don't get to claim it for forgiveness.
Right.
But they'll let you deduct it for your taxes. Sorry, I'm being snarky.
Silver lining. Silver lining.
Right. Okay. This is a good one. I purchased an existing business March 12th. I turned in the reports for the previous year for the employees. Can I use the PPP money for my company?
So they let you turn in reports for another company for the prior year? That's where I'm confused.
Well, I would assume the way, yes. This is a company he bought, and he purchased a company and submitted a loan application under that name. I would say yes, absolutely, but the question I would have is, are the reference periods the same? Mm. And I don't know the answer to that question. I think if you use the reference periods that are in there and you pass the test, I think you're probably okay, but I can't, I mean, that's an unknown. Mm-hmm. All right, on the look-back period for employees, are they only looking at the number of employees? Or are they comparing salaries for the two periods?
Yes and yes.
Both, yeah. So they're looking at the, for the look-back period that you select, you need to calculate the full-time equivalent employees using either the 40-hour method or the simplified method. And then you also need to take their wages into consideration. Go ahead, Jennifer.
The wages are just for quarter one, not
yes.
the look-back period.
Okay, yes.
So number of employees is the look-back period. The salary for the employees is for the first quarter of 2020.
Yes.
Except for the safe harbor.
Except for
Right, and so that to be clear, there's actually three possible reference. Yep. For if you're seasonal.
Right.
Okay, here's another question. I have no rent or other forgivable expenses to apply for outside of payroll. So the PPP amount is more than what I would normally pay in 2 pay periods. Mm-hmm. All right, so we wrote a paycheck a day or two after we got our funds and another paycheck 1 month later. Can I pay a third paycheck a day or two before 8 weeks from the date of when I got the money?
Absolutely. Yes.
Yeah. And, that's a good point. I did this conversion in my head this morning. I don't know why, because I was thinking, the loan amount was 2.5 times. It's 2.5 months, right? But then they give you a covered period of 8 weeks. Well, those are 2 different things. So I converted months to weeks, and it's like 10.8. So essentially, you have 11 weeks worth of money and 8 weeks to spend it. So that helps you. Mm-hmm. All right, that is all of the questions that I have been presented. I will wait a couple more seconds to see if anybody gives me one. I just had someone say the application refers to 56 days. That is correct. That is the equivalent of the 8-week period. Yeah. I am going to end with a poll, and I would like for all of you to answer this anonymously, just so we can have some feedback. I will send all of the attendees a message about our webinar next week. We have a series that's going on for at least 2 more weeks that covers the PPP and other aspects of the CARES Act. Next week's is a deep dive on the calculator and the application. So we're going to have several real-life examples, and we're going to go through the calculations. We're going to cap the number of participants so that you can be more interactive in that call. If we get sold out, we'll do another one. So we'll send that invite to you via email through Eventbrite. We are recording this, and I probably should have told you that ahead of time, but no one could talk, so you didn't say anything embarrassing. We will put the link to the recording on our website after it's been processed. I appreciate everybody's attendance and everybody's participation. Thank you very much, Chelsea. Thank you very much, Jennifer. Those two have been working very, very hard over the last couple of weeks to get this ready for you all. There are a couple more questions coming in. I'm going to go ahead and close the meeting and answer those questions offline. So for now, until next week, same bat time, same bat channel. Ta-ta.
Bye.
Bye.